the financial system is essentially moving everything onto a digital platform. The platform that you need, the blockchain, a public chain, needs to be one that has smart contracts. So it's not going to be built on Bitcoin. Wall Street is choosing to do this on Ethereum. So Ethereum is facing a moment that what we call a supercycle, similar to what happened in 1971 when the US dollar went off the gold standard. And that moment is when Wall Street innovated financial products because the dollar became synthetic in 1971.
Hello everyone, this is BTC Insight and welcome to yet another deep dive into BTC Insight. Before we jump in, make sure to hit that like button and subscribe if you haven't yet. You won't want to miss this.
Ethereum is not just another cryptocurrency. According to Tom Lee, it's the most important smart contract platform in the world, one that has been running without downtime since its creation. That level of resilience matters because Ethereum isn't just about value transfer like Bitcoin. It's the foundation for decentralized finance, stablecoins, and soon Wall Street itself. Here's the key idea. When companies acquire significant stakes in Ethereum, say around 5% of the supply, something called the power law effect kicks in. At that scale, a company doesn't just benefit from its own holdings, it actually strengthens the entire ecosystem. Staking adds security, Treasury holdings add stability, and large positions allow these companies to act as kingmakers within DeFi, helping shape which protocols and projects thrive.
Ethereum's very unique because it is a smart contract platform, and it's censorship resistant and super resilient. You know, it's 100% uptime since creation. It's never been down. And to build a treasury business on Ethereum means that a company, when they acquire a sufficient stake, let's say 5% of the supply, actually has what I call the power law come into effect. And that means that not only do you have a positive influence on yourself as a company because you own so much, just like MicroStrategy, but you have a positive impact on the Ethereum ecosystem itself because, one, you're providing a lot of security by staking, but also you are essentially what you call like a kingmaker, that when you own so much Ethereum that you have a chance to help the DeFi ecosystem flourish. And that means if Wall Street's going to build on Ethereum, a company like Bitmine will actually play a role in helping, you know, sort of evolve and identify the right DeFi protocols to flourish.
But now there are so many crypto treasury firms out there. What was it about Bitmine that stood out to you?
You know, we weren't the first because the first one was SharpLink.
Yeah.
And they were about a month earlier than Bitmine. But Bitmine itself was what I'd call a company that was a suitable candidate to transform because they had an existing Bitcoin mining business. And they had a very clean balance sheet, only a very nominal amount of debt, about $1 million. But the transformation was really led by myself and Mosaic. So we brought in Founders Fund, Stan Druckenmiller, Galaxy Digital, DCG, Kraken, Falcon X.
Wow.
Also that joined us in this effort is Kathy Wood's ARK Funds and Bill Miller. And so we've been able to raise a lot of capital into Bitmine. And that's how Bitmine's become now clearly the largest Ethereum treasury, about 9 billion of Ethereum held. So it's dramatically almost 3 times larger than the second largest now.
Yeah.
And in terms of global crypto treasuries, only MicroStrategy is bigger, with about $72 billion worth of crypto. So Bitmine is the second largest crypto treasury company in the world. Bitcoin is, I think, a ideal store of value. So it's digital gold. Yeah. But in 2025, there is a much bigger transformation underway because the White House has really pushed 2 different agendas. The first is the Genius Act. And that's to essentially greenlight stablecoins. And stablecoins are going to grow dramatically. Today, there's about $280 billion of stablecoins outstanding. Treasury Secretary Bessent thinks it's going to get to close to $4 trillion.
Yeah, he is.
So that's exponential growth. And then there's the SEC's Project Crypto, which is encouraging not only for Wall Street to look at digital assets, but to rebuild Wall Street onto the blockchain. Okay. So this is a dramatic moment where the financial system is essentially moving everything onto a digital platform. The platform that you need, the blockchain, a public chain, needs to be one that has smart contracts. So it's not going to be built on Bitcoin. Wall Street is choosing to do this on Ethereum. So Ethereum is facing a moment that what we call a supercycle, similar to what happened in 1971 when the US dollar went off the gold standard. And that moment is when Wall Street innovated financial products because the dollar became synthetic in 1971. But in 2025, it's now Wall Street essentially digitizing or tokenizing the real world. So Ethereum is unique because, number one, it's the blockchain of choice where Wall Street is building stablecoins and tokenized assets. But Ethereum is a proof of stake blockchain. So Ethereum treasury companies actually earn a staking yield. So, for instance, the Bitmine, roughly $9 billion of Ethereum held, if it was staked, would generate about $300 million in pre-tax net income.
Wow.
So the company is one of the most profitable companies in America today. Ethereum can go up a lot. Why don't I just buy Ethereum? And one of the differences is that a digital treasury like Bitmine is actually growing how much Ethereum you have per share. So I'll give you an example. On July 8th, when we closed on that initial transaction for taking over Bitmine, or transforming it to a Bitmine treasury, an Ethereum treasury, there was $4 of Ethereum per share held at Bitmine. So imagine someone could say, I could buy $4 worth of Ethereum or buy one Bitmine share. As of August 24th, Bitmine held $40 of Ethereum per share. So it rose by 10 times. But if someone bought the Ethereum itself, or they bought the Ethereum ETF, they'd still only have $4 of Ethereum per share. So you can see that a treasury company is growing your Ethereum holdings per share. That's why MicroStrategy stock did better than Bitcoin. In August 2020, MicroStrategy stock was $13. Today it's $335. It's gone up by more than 25 times. The price of Bitcoin has gone from 10,000 to 110,000. So it's gone up by 11 times, but MicroStrategy stock's gone up by 25 times. And that's because MicroStrategy, as a treasury company, has grown your Bitcoin per share. And Bitmine is growing your Ethereum held per share every week. It's growing by roughly 50 cents per day.
Lee compares this to 1971 when the US dollar was taken off the gold standard. That single move set off decades of financial innovation. In 2025, the parallel moment is Wall Street tokenizing real-world assets, bonds, equities, currencies, all on Ethereum. And here's where things get really interesting. Unlike Bitcoin, Ethereum runs on proof of stake, which means treasuries don't just hold the asset, they earn yield by staking. For example, Bitmine's $9 billion worth of Ethereum could generate around $300 million in annual pre-tax income. That makes it one of the most profitable companies in the US, purely from staking rewards. But why not just buy Ethereum directly? Lee explains with a clear example. When you buy Ethereum itself, your holdings only rise and fall with the market price. But with a treasury company like Bitmine, the Ethereum per share is constantly increasing.
You're growing your Ethereum held per share. So if you took the original example, okay, so let's say on July 8th, you had $4 of Ethereum or $4 worth of Bitmine stock. And then let's say Ethereum went down 50%. The original person only has $2 of Ethereum because they bought it for $4 and it went down 50%. But today, someone has $40 worth of Ethereum, and if it goes down by 50%, it's $20 per share. So you actually made money even though Ethereum fell 50%.
Wow.
So it's a crypto treasury that's properly managed and executed will vastly outperform an ETF or the Ethereum itself. That's why MicroStrategy as a company is larger than any Bitcoin ETF, because institutions realize it's better to buy MicroStrategy than to buy a Bitcoin ETF. The company only has a very simple balance sheet. It only has equity, and it has no debt. So the company is raising money by selling shares primarily to institutional investors. So institutions are buying Bitmine's stock, and then the money that's raised, and it's been running at about $1 billion per week. So institutions are buying about $1 billion worth of stock every week, is used to buy Ethereum spot. So just buying the Ethereum token. There are 3 or 4 exchanges that are executing the trades for Bitmine. So the purchases are being made, in conjunction with crypto exchanges buying Ethereum for us, and then it's held in custody. Bitmine is able to use very sophisticated strategies to acquire Ethereum that maybe a traditional investor may not have access to, because a traditional investor may go into a crypto exchange and then just buy spot.
Yeah.
But if you're buying $9 billion worth of Ethereum, you can't buy it straight, because then the price would just go to the moon.
Hops.
Yeah. So it's important to buy Ethereum when there is liquidity.
Oh.
Meaning, it's really important to buy the purchases without driving up the price. And it's possible to do. There's many ways, but as a company, we haven't revealed our strategies. But ultimately, the company last week announced it had roughly 1.8 million Ethereum tokens. So it's bought a lot of Ethereum, but it's bought it very quietly. Anyone can create an Ethereum treasury, because we've seen it in Bitcoin. There's 53 Bitcoin treasury companies.
53?
53.
Oh, that's a lot.
There are, but there's really only a handful that have come championed by institutional investors. So of the 53, I'd say only 3 of them actually have institutions buying the stock. MicroStrategy, MetaPlanet, and Semler Scientific.
Yeah, maybe that's why I only heard those 3 stocks.
Correct. That's right. So the other ones are not going to be as successful growing the crypto held per share. Because that's the most important distinguishing factor of a crypto treasury, is to grow the holdings per share. So when we look at the Ethereum treasury space, Bitmine has already separated itself because it's far larger than anybody else by almost 3 times.
Yeah, it is.
And the stock is one of the most liquid stocks in the world. So the way to measure that is trading volume per day. Bitmine trades at about $2.6 billion of stock every day. It is the 20th most traded stock in the United States. And when a stock is liquid, it attracts institutions, because institutions only buy stocks that are liquid. They want to be able to get in and out of a stock. And that's why Bitmine has attracted so many institutional investors. Also, in terms of size, Bitmine's market cap is around 10 billion currently, which makes it one of the largest stocks in America today. So institutional investors have to buy large companies because that's going to be part of their benchmark. So
Tom Lee's message is clear. Ethereum isn't just another crypto project. It's the blockchain that Wall Street is building on, the platform powering stablecoins, and the backbone of a financial system that's rapidly going digital. Treasury companies like Bitmine aren't just buying Ethereum. They're changing the way institutions gain exposure to crypto, making it easier, safer, and ultimately more profitable than holding the asset directly. If 2025 truly becomes the year of tokenization, Ethereum is set to enter a supercycle, one that could rival the financial innovations unleashed after 1971.
That's it for today's look into BTC Insight. If you enjoyed this deep dive, hit that like button, drop your thoughts in the comments, and subscribe to stay on top of all the latest insights. Keep questioning, keep learning, and we'll catch you in the next one.